Investors and traders, welcome to the channel Market Chart Pattern. In this video segment, we will be taking a look at the key US stock indices as we always do for our segment market analysis. This video is for educational purposes only. It is not a financial advice. In this video, I am going to mainly focus on the ES and we will also look at the other indices, but we will look at the ES, the SP500 E-mini futures in more detail. Guys, if you are looking for the analysis of some of the individual stocks that we follow, just a reminder that this weekend I have done a special report on the Tesla stock, so don't miss that video out because it is just not the end of the week, it is also the end of the month. So we actually go and look at the daily, weekly, and the monthly long-term chart analysis. We forecast the price levels, and also the pattern recognition tells us what kind of patterns which we are watching for. Okay guys, one more announcement about this video. In this video we are also going to cover the transporters, so the Dow Jones transporters. It will be done at the end of the video, so do not skip. Actually watch the video till the end so that you also watch how the kind of pattern which is being formed by the transporters. Okay guys, so just a recap of what we were looking at last week when we had done the analysis of the weekend. We were watching for this let me actually go to a little bit lower time frame, but we were looking for this ABCD pattern formation because we were looking for this 4138 level to be the possible support, because it was the 61.8% Fibonacci retracement, and based off that we were looking for that there was going to be a possible ABCD move higher towards the 4225 level. Unfortunately, that level did not materialize because the 61.8% Fibonacci retracement was broken down. So let's go down to, let's say, an hourly chart, and we'll try to revisit that area we were looking at. So there we go. And this is what we had. There was a one-to-one ABCD formation on the 1 hour chart, and look, 1 2 3 times support here. So it looked like at the 61.8% retracement level that was going to be a pretty good level of support, but in fact it did not hold, which is fine. So I'm gonna just remove these lines here, this one, clean it up a little bit. And in fact what the price in fact did was it went to the 38.2% Fibonacci retracement. So there we go, here we go, and I'm just going to clean it up a little bit, and I think, yep, so this was the exact bottom. But if you look at the, what do you say, if we just blow it up a little bit, you will see that you know, it was, these are just flushed down. So anyway, even if we take this low, it's fairly close, but if we take this low, then it is coming right at the exact level of 38.2% Fibonacci retracement. So let's go to our daily chart back up again. So what does it mean actually? After having you know, finding support, it's right into this resistance area, but look, it's pretty strong candle. So what we have is, what we're going to do is we are actually going to let me just clean it up a little bit. What we are going to do is we are going to take an expansion of this swing here. There we go. And based on this expansion, we have certain levels coming up. Excuse me, why is this expansion not coming up? Oh, it's not drawn correctly, I'm sorry. Here we go, and 1.618, and then this is the 1.272. So this level right comes to the pretty much close to 42.25 we were looking at originally. So 42.25 to 40 to 30 is the kind of level which is still possible. Let me just remove this ABCD structure as well because it's no longer there. And guys, so this is what we are watching for in the next week. Next week is kind of a special week in terms of the data. There are so many data numbers coming right starting from the Monday. So I believe the ISM comes out early in the week. Then on Wednesday, in fact, the FOMC meeting starts on Tuesday, next Tuesday, and then the rate decision comes out on Wednesday, and then I think we at the on Friday we have the big non-farm payroll. So the next week is actually loaded with the data. So economic data, and we should expect quite a lot of volatility to take place in the market. So these are the levels which we are looking for now. So 42.30 roughly, and 42.25 to 42.30, and it could go also expand to 1.618, which is 42.75. So there we go. Now let's also take a look at this from a longer term weekly perspective. So when we look at look this up from a longer term weekly perspective, there's something really interesting here. From a momentum perspective, the overall S&P 500 E-mini futures, this market is pretty strong because we have the 200 weekly moving average, and then we have the 20-week moving average on top of it, and price is actually on top of both of this. So from a momentum perspective, the price is in a positive momentum, so it's pretty good. What we have had here so far is basically a pullback. So we just do a retracement here. There we go. Very close to this 38.2% Fibonacci retracement, which we had a look at on the daily chart. And also one really important thing to make a note of on the weekly chart is this. Look at this trend line, downward trending. This is the whole world was watching this, and look at this candle, how terrible looking it was. And we had a rally, and everyone thought this was going to be the breakout, and then it pulled back right into it, and then it's just been going up. So now it's reaching fairly the levels where there's going to be fair amount of resistance, and we have the upper targets of around 42.30 to even 42.65. And then on the weekly we have 4300 roughly, the 61.8% Fibonacci retracement of these all-time highs reached early 3rd of Jan 2022. But one thing I would like to bring to the attention is that this potential ABCD formation is still in play, because what the market did was when it retraced, it formed a higher low. So in fact, this is a low. So if this is a low, this is a higher low, and this low is higher than this, it formed a higher low right at this trend line, downward trending, and price rejected lower price and moved higher, and it's been doing that for several weeks now. And we have some upward resistance for sure, but we'll have to see what the market is likely to do when it gets here. But there is a possibility that a price might actually be also moving in this ABCD formation higher, which can see the price target between 44 500 44.50 roughly, to about 4500 as kind of the potential price targets to the upside. Okay guys, so what we're going to do is go back to the daily chart, and we are going to take a look at the Qs. So look at the Qs. The Qs are also very strong, and what they are doing is they did a very nice ABCD one-to-one projection to the downside right into the support area here. And if you look at, basically this is how much the corrections have been in the past, and this is exactly what it did. And what is happening now is, looks like it's gonna go and go for these levels around 13,600 level. Let's take a look at the Russell, because Russell was the weakest. It went right into the support zone which we had identified, and the price action is really sideways. So this is now trading range. It really needs to get above 1850 for it to be out of this kind of price action that's stuck in. I'm going to remove this ABCD pattern because it did not play out. Let's quickly look at the Dow Jones. So Dow Jones is, looks like finally it's gonna go and retrace to this 78.6% Fibonacci retracement. Maybe it's also now able to break out of the upper zone. We'll have to wait and see. But this price action for the last couple of trading days is very strong. Let's take a look at IYT. So this is the ETF of the iShares Trust US Transportation ETF. So it will have the truckers, it'll have the airlines as well and stuff like that. So what I wanted to show here was that here, if we look at this totally naked chart, we have a bottom formed here on 13th of October, just like the major stock market indices in the United States. Then it had a nice rally, petering out beginning of February 2023, and it has had a pullback. Now the pullback has been right into this. Here we go. Let me draw it like this. So this is the structural low, and what it has done is it has pulled right into it, and it seems to be forming a bottom here. So kind of a double bottom here, triple bottoms. Usually not a fan of triple bottoms. Here was a triple top as well. It went down, but we have to be watching this because the transportation, they begin to move, then it is a sign that there is activity in the economy, because the goods are moving. Stuff is, consumers are perhaps buying stuff. So that is going to be a good indication. Let's see quickly in terms of the ABCD. So have this here. There we go. 253, that was the ABCD in terms of this retracement level. Let's take a look what this retracement level is. Here we go. So yeah, it's just between 50% and 61.8% retracement. This is where it went, found support. So I just wanted to bring this transporters to the attention that this we need to keep on watching this index ETF, because there was a point that it was falling sharply, and over the last couple of days it has had a pretty good recovery. If we just take let's say a resistance retracement, boom, down here it's sitting right at the 38.2% Fibonacci retracement. Guys, if it is able to break out of that to the upside, then 238 is the kind of next level probably is going to aim for. Then we have the top here, and then this ABCD remains intact, and perhaps it can go to 253 to 255 dollars per share level, which would be also good for the major indices as well. So guys, this is what we are looking at in the major stock indices in the United States. If you like how we look at the markets and the analysis, the way we do the analysis using pattern recognition and also key Fibonacci ratios, retracements, please do subscribe to the channel, and wish you good luck and good trading and a good weekend.